All right. Matt, the mortgage guy here. When is it the best time to buy a house? Should I buy in the winter, spring, or fall? Should I buy now? Should I wait? Popular question. In this video, I'm going to get into it. I'm going to talk about the answers to some of those questions, some thoughts, and what you should probably try to consider before any of that other stuff. All right, Matt, the mortgage guy, residential mortgage broker, boots on the ground, working with hundreds of clients every single year, talking to hundreds of real estate agents, keeping a close eye and pulse on the real estate market, the mortgage market, and bringing you information that I think is relevant. In today's video, it's a super popular question. Should I buy now? Maybe I should wait. And I'll share a funny story to start this video. And it really resonated with me when I heard somebody talking about this, because it happens to me in my personal mortgage business. You've got people who call and they want to talk about the housing market. They want to talk about timing the market, and they've got all these different ideas on maybe I should wait for this reason. I don't think I want to buy now. I'm going to wait X, Y, and Z. Rates are going to go down. The homes are going to get more affordable. This program is going to come out next year. Whatever the reason is, they've got all these different ideas, all these different things. They're looking at the market only and not looking at their personal financial situation. And half the time, these people that are overly concerned about all the external stuff, the market, don't even realize they're not in a position to buy anyway, right? Why would you worry about good time, bad time, mediocre time? If you couldn't buy, it's not even an option for you, right? So first step and most important step in my eyes and a lot of other professionals' eyes is make sure that you're in a position to buy. And that's really easy to do. Whether you have the intention to buy or not, you can talk to a mortgage professional. You can see what your options look like on the loan side. Before you even do that, you might want to look at your job situation, your credit score, your monthly budget around what other debts you have and how that all looks, and think about how solid of a foundation you have from a financial perspective, from a budgeting perspective, and how ready you feel in that sense, right? So important things to think about in regards to your finances, right? You want to make sure that your credit is doesn't have to be perfect, but you can work towards, as you're buying a house, straightening some things up, maybe some debts that you want to get paid off. When you do that and you have a smaller debt load, your credit score tends to go up. If there's anything on your credit report that needs to be cleaned up, there's services that do that. Sometimes you can do it on your own, but having your credit dialed in, not perfect, but as good as it can be, is important. Having a monthly budget to where maybe some student loans are paid off, maybe some credit cards that you've been holding on to. You finally got in a good financial position. You got a good budget. That $8,000 in credit cards that you kind of spun around for 3 or 4 years, get those paid off. These type of things, right? Then you go talk to a mortgage professional and you want to look at, I've got this much to put down, and here's a price point I'm looking at. What does that look like? I know what I pay in rent. Does that fit into my budget? I can run over some quick numbers right now, just to give you an idea of some of the questions you might want to ask. You're buying a place at $400,000. If you've got 3% down, 5% down, 10% down, 20% down, it changes how much your monthly payment is, right? Because the loan terms change. The mortgage insurance is different if applicable. And how much your financing is higher or lower based on your down payment. But 3% down at a 5.125 rate, taxes, insurance, mortgage insurance, everything all in, $2,745. Maybe you were thinking about timing the market and you had 17,000 other questions and ideas and plans. And you look at that and you think to yourself, I've only got 3% down, but I can't pay $2,700 a month. And the neighborhood I want to live in and the house I want to buy are about $400,000. maybe now's not the time for you, right? If you got 5% down, that number goes down to 2,600. If you've got 10% down, 2,476. If you've got 20% down, that payment is 2,198. These are the types of things. If this stuff isn't checked, if your job's not secure, or you're really feeling like my hours have been reduced, and my company's doing mass layoffs and all these things, that might be another red flag where you're not ready to buy. So I wouldn't spend time, effort, and energy tracking the market and whether it's going up or down or how you want to time it. None of that stuff matters, right? All of this to tell you time in the market beats timing the market. And really, I wouldn't worry about either. I would worry about oneself when you're personally ready to buy a home. You can read article after article and look at, February, March, April, May, home prices are going up in the spring, really popular time to buy. And so some people like when more inventory comes on and prices start to cool off, they buy in August, or they buy in the fall where they feel like there's less competition and less, people out there trying to buy. All that stuff is less relevant than your personal financial situation. Stable job, I feel good about. My credit is where I want it to be. I've got a budget monthly. I know what I have been paying in rent, and I know what I can afford on a monthly basis for a mortgage. Then you go get pre-approved. Yes, I'm approved. Yes, I qualify. If I put 5% down, here's what the payment looks like. And that will allow me to keep some reserves in the bank just in case something happens with my job that I do feel secure about. That's the type of mentality. Real estate, especially your primary residence, shouldn't be viewed as some speculative investment, some short-term thing. It's a long-term thing. And over the long haul, just like the stock market or just like anything else, up and down, but up over time. An average of 4.5% appreciation over the last 50 years in the real estate market, which shouldn't be the reason you're buying, right? You shouldn't buy because I think I'm going to buy something for $500,000. It's going to be worth $1 million 6 years from now. That's not really the purpose of a primary residence. It's having a roof over your head, not having a landlord that can decide to sell and you've got to move within 60 days. It's painting your walls, whatever color you want it, a place to call home, stability for the family, all those other reasons. Really, I don't even have to include the tax benefit and the other things, principal pay down and that 4.5% average appreciation over the long term. That's all bonus stuff, right? But really, it's something that people look at incorrectly, in my personal opinion. I think it should be looked at as a internal. Am I ready? Not is the market ready for me? Are rates at the all-time lows and home prices are affordable and this and that? When you buy it and you stay in it for decades, whether you paid $375 or $415 or $480 is going to be way less relevant 30 years from now. Even less relevant than that is whether I got a 6% interest rate, a 2.75, an 8.2, because truth be told, in those 30 years, it'll likely be refinanced. Rates will go higher, lower, and sideways the whole time. And so, you're not necessarily in that mortgage for the full 30 years. Really, nobody is. So hopefully this was helpful. Let me know if you have any questions. Me and my team are happy to help get you pre-approved, answer some of these questions for you. Because like I said, not everyone's ready, right? But before you do all the work to study the market and know what you want to do timing wise for rates and the market and all that other stuff, do some internal work. See if you're personally ready. That's my best advice. Go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help. We'll be in touch soon. Take care. Am I supposed to say, we gonna see? All right, we gonna see.